Hi, and welcome to Campus Mortgage, the mortgage industry's leading provider of underwriting, processing, quality control, servicing, and closing training. Before we get started, please take a moment to read Campus Mortgage's disclaimer and keep in mind the information contained in this video is time sensitive and subject to change without notice. So let's get started. Today we will be discussing part 3 of a 3-part video series, which will cover mortgage fraud red flags. So let's quickly recap what the definition of red flags is. Red flags are inconsistencies that are provided during the application process or in the loan file that's going to be suspicious and require a second look. Here's that list of the 6 most common areas of red flags. In video series 1 and 2, we've already gone over liabilities, credit, assets, employment, and income. So in this 3rd video series, we will be discussing occupancy and appraisal. Occupancy. With occupancy, it is very difficult to prove misrepresentation, especially when you're looking at a purchase transaction. So these are some things that you're going to want to look out for. So when reviewing purchase occupancy, you want to look out for these things. Number 1, employment distance to their job seems unrealistic. Let's say they're purchasing this house to live in, but they work 100 miles away. Seems very suspicious. Is the borrower downgrading? Do they currently live in a 4-bedroom home and they're downgrading to a 2-bedroom but still have a family of 5? Applicant intends to lease the property, so that is a really big red flag to look out for. New homeowners insurance policy actually is coded as a rental property. And lastly, the occupancy affidavits in the file show that the borrower does not intend to live in that property. So in reviewing refinance occupancy, you want to look out for these things. Rental property listed is more than the primary residence. There's a different mailing address on the applicant's bank statements that they provided or any other type of documentation that they provided to you. Different address being on the credit report. Appraisal that you get in reports that it's either tenant or vacant occupied. Reverse directory shows that does not disclose that the subject property address is theirs. Moving on to the appraisal side of things, red flags that you want to look out for, starting with comparables, are not similar to the house that they're refinancing in size. Large positive adjustments across the board on all the comparables used. The appraisal not being ordered by a third-party entity. A for rent sign is in the photographs of the appraisal. Appraisal dated before a contract. Significant appreciation in a short period of time. And weather conditions not consistent with the time of year that the appraisal was actually completed. Lastly, the address on the photos provided within the appraisal do not match the actual address on the appraisal first page. That concludes part 3 of this 3-part video series. For more tips, videos, and for a full list of courses offered by Campus Mortgage, please visit our website at www.campusmortgage.org. Thank you, and as always, make it a great day.